Hello everyone and welcome back to another video of Financial Impulse. In this video, we are going to understand the role of 200 days moving average and how we can use this to understand if an index or an individual stock is an uptrend or downtrend and how we can get the maximum profit out of it. So, I will discuss all of these things in this video, and also I will help you by understanding the crossover of 50 days moving average above the 200 days moving average, which we call it as golden cross. Okay, and how all these things can be implemented in trading and investing in real life, right? So this video is going to be very informative. Make sure to watch this video till the end. So let's get started. Okay, now let me take you to the screen. So here you can see the definition of 200 days simple moving average. It is talking about simple, but we will use the exponential. Okay, and you can see the place where it is mentioned about death cross and golden cross and all these things. Okay, so we are going to go through in details about all these things and how we can implement them, right? So SMA, EMA, everything is mentioned. I will share this link in the description section. You can go through it. Okay, now let me directly take you to the charts and help you understand in practical way. Okay, so this is gold. Okay, I discussed about gold yesterday in my yesterday's video, and you can see that first of all, let me disable 50 days moving average. Okay, and once I enable the 200 days moving average, you can see that the price is actually taking support of 200 days moving average multiple times. Okay, when it is an uptrend, and you can see that this moving average is always turned upwards when it is an uptrend. It is never in the downside. Okay, here it passes through it. Okay, but again it goes above it, again it acts as support, and it continues going above it. So this is a clear sign of a long term uptrend. Okay, so that's why if you would have invested in gold right around here at the price of 30,950, the current price is 61,260. Okay, so it has almost more than doubled. Okay, so this is the long term view, and you can use this for the short term trading also, like swing trading, positional trading. Okay, so I will go to the daily time frame to show you the same thing. Okay, so let's say you want to mark an entry. Okay, when the price has touched this 200 days moving average. Okay, you can see that the price has touched the 200 days moving average. Okay, and is acting as support, but it has not shown a significant beginning of a new uptrend. So that's why we'll wait. We'll draw, the line. Okay, the resistance line, and we'll wait for it to be broken. Okay, it was broken here, but not with a strong price action. That's why we'll ignore it. Again it came down, and again it touched this line. Okay, and again it came down, touched the 200 days moving average, and now it has finally broken and made this as its support. Okay, it was acting as resistance here, this line. Now it is acting as support, and now you can see the uptrend. Okay, so if you would mark your entry around this point, okay, so you will get around 16% return in 168 days, which is roughly around half a year. Okay, so not bad. 16% return is a very good return. And also here the 50 days moving average can act in a very good way and help you in understanding the entry well. Okay, so you can see now the 50 days moving average has sharply turned upwards, and the price is also above the 50 days moving average. So a perfect entry and a very good outcome. Okay, right? So this is how you can use these two moving average in your trades and investment. Okay, now let me go to Nifty. Okay, so that we can understand the bigger market using these two moving average. Okay, I will first hide the drawings. Okay, the drawing has been hidden, and I will hide the 50 days moving average as well. Okay, and you can see that in the daily time frame, the 200 days moving average is clearly acting, as a good support. Okay, this is the COVID crash. Okay, these are not the places where we should make entry. We should only make entry once we get confirmation from the 200 days exponential moving average. Okay, you can see that the price is using this as support now, and now you can take your entries in any stock or the index. It's up to you. Okay, and again we are getting to see some weakness back to back. Okay, here, and notice this thing. Okay, the market has started using this 200 days moving average as its resistance here, and that's why it went down again. So not an ideal place for entry. We have to wait till the moving average has turned upward and the price is staying above the moving average. Okay, which has happened here. Okay, this has been retested, and you can see this clearly big move. Okay, so in order to be a successful trader or investor and to stay long in this game, you have to strictly follow some rules, and the simplest and the basic rule that you should always follow is this 200 days exponential moving average. You should not enter into any stock or swing trade or any investment where the price is staying below the 200 days moving average and the moving average has either flattened out or started turning downwards. You should not enter at that point. You should only wait for the price to use the 200 days moving average as its support. Okay, then only you can make an entry. And here is another example. You can see it is using 200 days moving average as its support, and now you can see the price sharply going up. Okay, so you have to filter out such scenarios, watch the price action properly, and then make your entries. And you can see how smoothly this 200 days and 50 days moving average have given a crossover, the golden cross which we call, and you can see the price swiftly going up. Again, this 50 days is acting as support here, the price is going up, and now it has started turning downwards. This is the present scenario of Nifty. So this is a clear indication that the market might be in a upcoming downtrend. Okay, the price might go here, touch this moving average, and then start going down even further. This has a very high probability. So in that case, I strongly recommend not to mark any new entries in this current situation. You can only invest in gold ETFs, physical gold, anything of your choice, but only stick to gold. Do not make any equity entries because we are seeing some similar patterns that we have seen before also. Let me show you that. If I go to the weekly time frame, okay, and you can see here that around October 2000, this is 2018, okay, here we can see that the price is dropping below the 200 days moving average. Just give me a second, let me. Okay, dropping below the 200 days moving average. Okay, then it is going up, dropping again, and then it is going up, and these are the two clear signs of weakness. And then we can clearly see the big market crash. This is the COVID crash. Okay, and now if I come to the present scenario, we are getting to see almost a similar situation. A big drop below 200 days moving average, a small drop below the 200 days moving average, and now the price is resting right above the 200 days moving average. So there is a high probability that it might start dropping. Okay, it could be for any fundamental news or anything. We don't have to bother about the news. Okay, we just have to focus on price action, and the price action is clearly telling that Nifty is weak. Okay, and we should stay away from equity investment. Okay, so that is how you can use the 200 days moving average in your analysis. Okay, now let me just show you the example of another index, that is the IT index. Okay, we can see that after the COVID crash, the IT index also gave one golden cross before starting to give a big uptrend. Okay, here, right, and you can see then it has crossed below, and this will be a move of more than 150%, I believe. Yes, 162%, right? So it's a big move. That's how you can filter out the timing of your entries, how you can mark your entries above the moving average. And let's say the current scenario in IT sector, here is a clear sign of, okay, I have disabled it. Okay, here is a clear sign of resistance. So we will wait for this to be broken, and it has been broken here. Okay, we get to see the golden cross, and there has been break, and now it has started resting above the 200 days moving average. So we have to wait for a complete confirmation that the price will go up like this, use this as the support, and then the 50 period will turn upward, and then only we can confidently make our entries here in the IT sector itself, the IT ETFs or the individual stock, TCS, Infosys, HCL, Wipro, anything. Okay, for now do not make any entries, just wait for the confirmation. You definitely don't want to get stuck in an upcoming downtrend, because we do not know how far the market will fall once it starts falling. Okay, that is the most scary part. Okay, so be a wise investor and mark your entries only based on the price action. Okay, and also use 200 days moving average as your guide. Okay, so this was about the IT index. I will also give the example of one more individual stock. Let me go to the watch list, and let's take Pidilite Industries. Okay, here is Pidilite Industries, and I will first of all hide the 50 days moving average, and we can see that Pidilite Industries has been consistently using the 200 days moving average as its support. Okay, consistently without a fail. The moving average has always been in upward pointing direction. Okay, and it has been consistently in uptrend, but at the present scenario we are getting to see some exceptions, that after a long time this price action is crossing in between Pidilite Industries, okay, the moving average, okay, and there is a chance that it might use this as a resistance and start coming downward. So that will be a scary situation, okay, let me tell you that. So we do not have to, mark our entries here, as I already mentioned. And if I consider one second, if I consider the support level, so I see this 2000 level as its potential level of support, okay. The price could take a turn here, okay, it could take a turn here, and it could hit this level almost 2000, and then from here on it can start going up, but that will take a long time. This is showing June 2024 around, just an estimation, okay. During that time we have to mark the price action and then mark our entries, okay, for Pidilite Industry. This is one example of how you can use the 200 days moving average, because let me just clear all the things and you can clearly see that the moving average has started turning sideways, and also it has started turning downwards little bit, okay. You can get a clear view once I go to the daily time frame, okay. Here it is, okay. The price is trying to break this trend line, but it is not able to. We have to wait for it to break and start turning upward, okay. So that is how you can use this 200 days moving average, and I would say that it helps a lot. It simplifies the things a lot, only if you use it correctly, okay, in your trading and investment journey. I hope this video was helpful. Please hit the like button and subscribe to Financial Impulse for more such informative videos. I'll meet you in the next one. Bye, take care.